Good morning, all, and you're all very welcome to the Monday market preview forecast in the week ahead here at the Alpha Capital Group. So, I suppose recapping on Friday's movements, in our run through and our kind of recap on Friday, we talked about that sustained dollar weakness off the back of the CPIs, those cyclical midweek reversals, and of course the profit taking that we saw in that dollar rally, should I say. And they're starting to see that kind of turn in fortunes for those riskier asset classes. So we've seen progression in gold, we've seen progression in the stock markets more broadly, and of course the likes of the FX markets as well has seen some buoyancy with euro and doing quite well against obviously that weaker dollar play. Now, of course, recapping and looking at the week ahead, we had finished that week very, very strongly on the DXY, and we have continued to show and illustrate, excuse me, clear weakness in the dollar to begin this week. Now, of course, Tuesday, looking at our economic calendar, we have the CPIs. So, of course, CPIs has been one of the key, I suppose, economic pieces of data over the last 3-4 months specifically, and it's going to continue to be the case for the rest of the year. Now, the Fed, which are on blackout between now and the 21st of September, so we won't hear anything more from any Fed members until the next rate meeting, has said that they are obviously very much data dependent and are watching all of these major prints very, very closely to determine where they see interest rates being forecasted, and then obviously delivering upon that, and then of course projecting through the likes of the dot plot and consensus for 2023 as well. So tomorrow, I think, is going to be really, really important because we have seen in July and August really, really high inflation. We have seen that start to come back down. Last month, we had a reduction from 9.1 to 8.5%. This month, tomorrow, we are looking at a further reduction of 8.1 as those reduction in energy prices, oil prices, starts to abate and starts to bring down those inflation figures. So I think the clear consensus is tomorrow that anything under an 8 print, if we start to see 7 prints tomorrow, 7.9, 7.8 for CPIs, that's going to be very, very good for the markets. And we will see buying in the stock markets. We will see that sustained weakness in the dollar. And you'll probably see some aggressive moves in your hedges, like your gold and probably your euro dollar as well. So it's just about being aware of that. For those who, I suppose, trade shorter time frames, it's important to be kind of aware of the data as well, because you will get slippage, you will get volatility around these key economic pieces of information. And it's, of course, preparing yourself to be best able to take advantage of that as well. So I suppose from our perspective, it's very much, I suppose, watching the price action after Friday's softer close, particularly in the dollar, and then being able to, I suppose, preview the week ahead. Now, tomorrow, today we have obviously figures in the UK, which proved to be slightly weaker. But we have commentary coming out from de Guindos and Schnabel out of the ECB today, which has given the markets a little bit of lift following some of those comments over the weekend as well. So it's just about being aware of that as well. Now, tomorrow, we do have more data out of the UK, more data out of Germany and the Eurozone. The ZEW survey, I think, will be important to see kind of how things are being reflected in Germany and in the broader Eurozone. And then, of course, tomorrow afternoon at 1:30, we are looking ahead to the CPI figures. So the first couple of days is going to be very nitty gritty. We are seeing those markets. I think if I was to look at the markets, I would say broadly the markets are probably expecting a weaker inflation print, given how abative and how reduced the oil prices have been and some of those other commodity prices, which of course means that if that figure doesn't relay what market participants are expecting, and maybe we see 8.4, 8.3 tomorrow, and it's above expectation, well, then that's obviously going to pare back some of those gains that we've seen into Friday's close, and of course to the start of this week as well. So we will be on the wires constantly this week, kind of giving updates on market conditions, obviously given the volatility as well. Now, meanwhile, in the UK, it has been confirmed that the funeral ceremony for the Queen will be taking place on Monday the 19th, which makes Monday the 19th, next Monday, a bank holiday as well for those UK traders. So it's just about important to be aware of that. We have yet to hear of any change in trading hours in other locations. There was rumors last week that certain sessions would have reduced their later opening times as a mark of respect, but of course we have yet to hear that out as well. So if there's anything emerging on that, we will let people know in our discussion group as well also. So that brings us back kind of into the charts. And we are seeing that dollar weakness. We had that previous consolidation into August month end. We had that significant rally, and now the dollar is really kind of pulling back and paring back those gains. So at this moment in time, dollar is very much, we're seeing very much risk on sentiment in the markets, that weaker dollar, that stronger gold, obviously that stronger indices as well. And that's been reflected very, very clearly in these charts. Now, I use the DXY, personally speaking, to kind of get a clearer glimpse of the fundamental shifts within sentiment within these markets. So obviously, if we have a stronger dollar, it's very much a safer haven, safer play. There's exposed risk within the markets, or exposed risk within market sentiment. And of course, then when we're seeing the opposite, when we're seeing that weaker dollar, it means there's a more aggressive sentiment by market participants. And that's exactly what we're seeing at this moment in time. Now, when we move across to gold, we're seeing that also as well on the gold prices. Those bottoms at 1695, 1700 that we've been looking at last week is continuing to play out. We're seeing those nearer term highs at 1730. From my perspective now, tomorrow CPI will be really, really important to determine whether we get that push through this short-term high at 1730 and get that elevated sweep of price action to continue to the upside, to start reversing some of this broader time frame bearish sentiment that we've had pretty much now for the last month or so, from August month end into the beginning of September last week. So that's what I'm watching particularly closely here. I am still long gold. I mentioned it last week. I'm looking to hold this position, but of course tomorrow CPI, if it comes out stronger than expected, like a higher number on the CPI, you're probably going to get a revision and a revisit of these lows down here. But of course, let's just wait and see how the price action develops in line with the data as well, for those who are looking at that. From a broader perspective, indices still continuing to recover. So we saw that relief rally or recovery off the back of China's CPI numbers on Friday. A lot of bearish price action really kind of ended. We got that kind of initial break of lows. And then, of course, on Friday evening, we got the price action taking out those other lower highs. And of course, price action has continued to propel to the upside. So broadly speaking, now we are seeing that fairly strong, significant recovery in the S&Ps. And my consensus on Friday, I did mention this area around 41, 41.20, 41.50 being an idea for early markets this week. And of course, we're still getting that risk on sentiment. So markets, S&Ps, indices, broadly speaking, continue to grind higher. At this point in time, let's just wait and see how the price action fares out. Well, from my perspective anyway, but there is a lot of room to potentially come even higher. So yes, we have this area of liquidity here. We could very easily try and go higher into kind of the really high 4100s, and thus that's a possibility as well. Now, with the bullish indices, we're seeing the NASDAQ, we're seeing the Dow Jones, we're even seeing the European markets show some resilience off of that kind of 3-4 week cycle of selling price action. And of course, across the board, NASDAQ's grinding higher consistently. We've now taken out all of August month end highs at 12.6, at just underneath 4100 at 40.65. And of course, on the Dow Jones, we are also seeing a very, very similar play, where we've now taken out those August month end highs as well. So very much investor sentiment to the upside this morning to begin the week following Friday's bullish close. And it's a case of assessing the price action into the early parts of this week, because we could very easily see indices fly higher, particularly speaking off the back of a potentially weaker number in the CPIs tomorrow. And that's going to be the big driver this week to kind of follow on from those who are day traders. So meanwhile, now in European markets, since the passing of the Queen kind of Thursday, Friday, when the news emerged, we have seen that fairly significant FTSE rally. We have bounced off the 71, 75, 7200 order block area of interest here, which I've kind of mentioned last week. We have got that bottom, very, very clear daily reaction on Wednesday and Thursday. Friday seen that bullish move, and today we're seeing that continuation in strength to the upside. Now, at this moment in time, I am looking at a move back into the 7500s to mitigate all of this selling price action on the order blocks, on the imbalance that we've seen, that kind of straight line selling price action, looking to see the price action kind of effectively mitigate that in the opening parts of this week. And of course, tomorrow's catalyst on Tuesday with the CPIs could be the narrative to kind of push these indices higher back into this region up here. So that's kind of what I'm watching very, very closely into tomorrow's CPI as well. Last but not least, on the DAX, we are seeing that bullish movement again. So this range of interest I suppose structurally speaking on the daily is quite interesting because we had that kind of 12.5, 12.6 bottom playing out very, very clearly. We got that retest of the lows last week with that clear consolidation. And of course, price action ground higher into this roadblock around that 13,100 level. We've broken through, we've cleared through. And again, like similar to the US and UK indices, we're seeing the European markets also grind higher. Now, across the board, broader markets in Europe are doing very, very well today. And of course, recovering very, very nicely from those imprints on Friday as well with the data. So that kind of brings us ahead to today's afternoon session open. Now we do have bank holiday in China last night. So again, there was a little bit of a lack of volume, I would say, with the Asian markets broadly. However, markets have handled that particularly well and have opened this morning's session stronger as a direct result. So as we know, that kind of brings us ahead to obviously today, obviously commentary. Tomorrow, looking for forward guidance on the CPI. Realistically now, I think market participants with the Fed are looking at 75 basis points. But if we see a greatly reduced number on the CPIs tomorrow, sentiment might just start to shift a little bit back towards 50 basis points. And I suppose now that's going to be the big thing. And we've had much lower growth. Retail sales have been fairly okay-ish. To the downside, I suppose new home sales has been pretty pathetic, with a 60% reduction in new home sales in the US since those 2020 COVID highs. So we also have to factor that in as well. Of course, Beige Book last week was a little bit up and down with kind of sentiment. Maybe still just room there for more upside with the Fed going 75 basis points on the 21st of September. And of course, tomorrow's CPI will be interesting, given that, of course, we had a fairly robust NFP jobs number just 2 weeks ago as well. So if we're seeing a strong CPI number, I think we're seeing 75 basis points very much remain on the cards for the Fed, which means hawkishness, which means more upside in terms of maneuverability within their federal fund rate policy. But of course, being able to factor that back into the price action is ultimately important. So as I said, tomorrow's CPI will be interesting. And of course, gearing up then for Wednesday, Thursday and Friday to round out the week as well. So we will be back tomorrow. Tomorrow I will be looking at pound pairs specifically. And of course, then we will be doing midweek market updates as well, just to kind of factor in the volatility in the wake and in the back of the CPI prints tomorrow as well. All right, everyone, have a great week. Trade safe. And of course, if you have any questions, feel free to reach out to us in our Discord group as well. Thank you.